In this week's currency update, a number of strong trends appear to be developing in global financial markets as the likely impact of President-elect Donald Trump's policies are priced in. Global bond markets have been hit hard by increased inflation expectations and a likely increase in supply to fund infrastructure spending. US 10-year yields hit a high of 2.3% this week, up about 80 basis points from levels prevailing at the end of the second quarter this year. In prepared remarks before Congress yesterday, Fed Chair Janet Yellen hinted that a rate hike could well be appropriate relatively soon. Indeed, she went on to warn that delaying increases in rates could see the Fed end up having to tighten policy abruptly next year. Now, Westpac expects the Fed to raise rates in December. That's very much priced in. We also expect the Fed to raise rates twice next year, and markets are much less convinced on that point. If we're correct on that forecast, that's likely to continue to support the US dollar, which this week broke to a 13-year high against a commonly traded basket of currencies. Other factors that could continue to support the US dollar are the possibility of a repeat of the 2004 Homeland Investment Act, which encouraged US multinationals to repatriate capital held abroad. We also face a potential rolling series of political risks in Europe, which start on the 4th of December with the Italian Senate referendum and Austrian elections, and continue through next year with major political events, including the Dutch, the French, and German general elections. That's likely to continue to weigh on the euro, which trades close to 18-month lows, round about 105. This strong trend in the US dollar has kept the Aussie dollar on the back foot this week, and that's despite continued strength in iron ore, coking, and thermal coal markets. It looks like this story should continue next week, and I wouldn't be surprised to see some further weakness in the Australian dollar down towards the 73 to 73.5 level. One key area that we'll need to continue monitoring very closely is the continued strength in the US dollar against Asian currencies. All Asian currencies are lower since the US election, some considerably so. Policymakers continue to try to deal with capital outflow, and that's something that's likely to continue until we get a sense of what President-elect Donald Trump's position is on tariff and trades from an Asian perspective. Adding to concerns about the risks in Asia from tariff and trade, this week RBA Governor Lowe said a surge in protectionist trade policies is probably right at the top of the list of things he is worried about. This makes for a difficult combination for the Australian dollar, and one that's likely to lead to increased volatility in the weeks ahead. These are all factors we can talk about in next week's currency update.